This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Monday, November 24th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here, December corn down a penny at 424.5. Jan soybeans were down 4 1/4 at 11.20 3/4, and December Chicago wheat was down 3 3/4 at 5.23 1/4. This morning, we had an export sales announcement of 123,000 metric tons of soybeans to China. It was for 25-26. We've got holiday week this week. We will have no markets on Thursday for holiday or for the Thanksgiving holiday. Wednesday will be a full market, and then Friday morning we'll reopen at 8:30 Central and close at 12:05. So we will have a reduced session there on Friday, which will bring me into my next point. It'll be kind of interesting. We got first notice day on Friday for the December contract, so it should be pretty busy. And also Secretary Rollins on Fox News this morning talking next week. She's confident that they're going to have guidance on the farm aid package. So that'll keep everybody's attention there. With that, guys, hope everybody had a nice weekend here. Ben, I guess coming into the holiday weekend, we kind of get some choppy markets, but there is a lot going on. So I guess share a few thoughts here on your mind, and then we'll throw around the room.
Yeah, we had option expiration on Friday. We go into first notice day this week, first placement day, ultimately deliveries. This is a period that we've talked about probably ad nauseum. A lot of basis contracts out there that have to be rectified. Technically, we did some damage last week. We're below the 20-day, we're below the 50-day. We're getting close to trying the 100-day in March, and we're also challenging the bottom side of the upsloping channel. And I kind of think that come Tuesday, Wednesday, maybe some of the pressure comes off here as everyone dries up with making their calls to price or roll. I can't explain 99 million acres of corn, 186 bushel yield, and DC March trading 12. That we've either done more business than we know of, maybe a combination of not a 186 yield, but certainly that spread is not. Trading 12 with those kinds of numbers is not what you would expect. So I think that hopefully we find a bottom here sometime in the next 48 trading hours. I don't foresee any massive deliveries. And if you do, you're supposed to buy heavy deliveries as an old trader axiom. But, this is a week that typically can come. It's either a have or have not week. It's either a really dead week or it can get really volatile, especially the day after Thanksgiving. So I think it bears watching, and I think it bears watching how we perform coming out of, let's call it Tuesday, Wednesday. Demand continues to stay strong. We get export inspections today, which have been supportive for multiple weeks in a row. It's been kind of the most consistent data bit we get, and that assures us that we are in fact exporting a lot of corn. So we'll see there. Soybeans, just going to be volatile. We made a new low on Friday, new recent low from last Sunday night. Got no follow through. Traded back up into the high 20s, and maybe a little tug of war here until corn can find some footing. So I think it's a chop in soybeans until we know something else. We did hear from Secretary of Ag that they're expecting some payments to come pretty soon, a week or two. So that would be, I think that would be kind of underlying supportive, and that people may back off on deliveries from cash flow needs for the short term. So we'll see. I think that this is a big period for corn and a real test when the mechanical nature of first notice day kicks in and deliveries become relevant.
Yeah, and you reference inspections today. It's going to be interesting too. We're going to get 2 export sales reports this week as well. We get one tomorrow morning, and then we're also going to have one on Friday. So it's as we play catch up, we're albeit I guess we're it's so far behind, but at the same time, it's still data that the market will look at there. So it should be interesting on that front. Jace, what's on your mind on the markets? What are you looking at?
Yeah, I agree with Ben. I'd say, beans have gained quite a bit on corn, since the announcement of Chinese purchases. We got really excited, kind of ran up beans, and I think the lack, now we're kind of having a little bit of the hangover, the lack of purchases. So I think beans are the most vulnerable as it relates to corn. It's had a good run against corn, a 2.5, 2.5 ratio. Back in October, it was closer to 2.3. With really good domestic corn demand, with really good export program that we're seeing in corn, and then the lack of the soybean purchases from China. That's kind of what I'm watching, Dan. I think beans have more room for a larger break than corn. I think corn, you get too cheap, we start running, into more demand. So I would say corn's more supportive fundamentally than beans right now, without something changing from what we know today. South America, right, we're record planting pace. They just got a bunch of rain, so they're really good shape, really good start. With a record, additional soybean planted acres. So that's what I'm watching. I think beans have a bigger correction. Hopefully, something changes there and China steps in, and we get some new data where China does buy the heck out of it. And we could really use, I could talk to customers, like we're due for a problem in, in South America or in this country. We just keep having really good weather for both, both the Americas, and we're just overproducing, everything. I think Justin said on this point, ad nauseum, we need new policy. We need domestic demand to pick up. But otherwise, this is a problem that's not going away. We need to take either acres out of production, or we got to find some way to increase demand. And so I think eventually that, if we have really good South American weather, I don't think China can buy enough beans, because if China comes and buys the beans from us and South America has another record year, world stocks are just going to go up, and we're going to lose business to our other trading partners, So, I don't know, this week, I would say corn bulls, we're looking at corn today, and I think we need to close higher on the day in corn. That'd be my guess, is that we try to buy it here today. Technically, I think Ben was mentioning we're through, at some of these support levels. So corn really needs to have a good day, I think, to keep the bull run going. That'd be my guess. Corn kind of closes stronger to beans. And so, yeah, that's what I'm watching. Yeah. First notice day. Corn's acting amazing for what we know. And, coming into first notice day, I would have expected a lot more weakness. I mean, you look at corn spreads, D-Smart corn at 12-cent carry. Time will tell, but, coming into first notice day, we would expect, if there is a lot of unpriced corn at the elevator and basis only contracts, you should see a lot of weakness in that D-Smart corn spread as those things get rolled. So, yeah, keeping an eye on that. If corn acts really good right through first notice day, I'd be a little nervous as a corn bear. Maybe this run goes a little longer. So.
Oh, very good. And as you talk about, holding trends and, support levels. I mean, if you look, Ben, I know you look at technicals pretty closely, but you don't want to finish below 421 in D's corn. That starts to look pretty ugly.
419-ish there's an extreme, tremendous amount of volume traded there on the way up. I wouldn't be shocked if we tested it. I would be shocked if we really ran some longs in below that and sold poorly. That would be a bad sign. Yeah, I think corn's got good demand. I think there's a lot of questions left to be answered there that we probably don't find out until we continue to get these, backdated sales numbers and then get a final yield number with complete data, which, I wouldn't expect a huge change off that, but it's worth noting that last year we dropped corn for 4.5 bushels, I think it was, from October to January. And we're doing that from a pretty elevated spot. So
You think we're trading
I
that,
don't know.
Ben? You think the market's
What's that?
trading? You think the market's trading that shrugging off the last USDA report, and that we need? I mean, I've heard that, but obviously you hear that from growers, and it's kind of wishful thinking. Do you think the market's trading that we need to come down in corn yields? Still?
Yeah, I mean, I believe that in a situation like this, which is really kind of unprecedented, atypical for that long, I think the market sniffs it out, right? The market is the place where buyers and sellers find value. And the fact that we're up here, I think, is indicative of great sales, right? Great exports, and potentially a reduced reduced yield. So the price of corn is the price of corn, and it's really, I think we're going to look back and go, yeah, that's why. But until you see it, you're kind of throwing darts. But yes, I think that the market doesn't. Maybe the grower has done an unbelievable job, diamond hands, and storing it away. Going back 6 months ago, there were a lot of people that were talking about sell beans and store corn. I personally did not agree with that. I didn't think that was the right play. Maybe we sold more beans and we just stocked corn in every single corner of every shop. And, we know there was a lot of bags and things like that. And maybe it's not. Maybe it's just they've been able to hold it off the market. And maybe it's a combination of the three. But the spreads in and of themselves do not reflect what we know today on paper. So.
Yeah, No Till brings us a comment, 0 basis through November and 5 over for December locally. I wonder where that is, No Till, if you could throw it in the chat. But I mean, we've referenced it a number of times that I know, Ben, out your way, you're 30 plus over in the cash markets. West is still soft, but that would make sense given the glut of corn and not having to bid up to buy it, right?
Yeah, I mean, Indiana-Ohio border is
they're in Indiana.
really firm. Northwest or kind of central Ohio. They're seeing some 20-ish overs. Growers looking for 25 to 30 over. Northwest Indiana is slow. They had probably the best crop of the two states. A little slow to move, but it's firm everywhere. And there's a displacement of corn here. I think that Indiana, Ohio, I don't really get involved in yield debates, but there's no way Ohio's 194, and there's zero chance that Indiana has a record. And then you get to Illinois, which was good, and they told us it was really good in the last report. But a lot of the corn along the river system was, average-ish to, no home runs, at least from what we've gathered. Good, but not, astronomical numbers. All the excess corn is not on the delivery system. And I don't want to say all, I don't want to be that guy. A lot of it in, Kansas, Dakotas, things like that. It's not on the delivery system. And it's in a place that is really not reflective of a delivery market. And that's based off the, Illinois, Mississippi, and Ohio rivers. So that could be part of the disconnect. If that were the case, I think in the East, basis is going to have to do some lifting. And potentially the board at some point, and basis probably stays really poor out west. So
very good. Let's move on here real quick. We got a couple minutes to the open. Rylan, you and I talked offline this weekend. Cattle's this is interesting now because you kind of got the tale of two tapes, right? You kind of got an expected bullish cattle on feed number, which all things being equal, sure. Like I think that was what the market was looking for and needed. But this Tyson announcement's a kind of a game changer. So why don't you fill us all in here on kind of what took place kind of after the close on Friday?
Right. So, I mean, like, obviously the friendly response to the report, you had the lowest October placement number on record. And then shortly after, the news article started swirling about the Lexington, Nebraska beef plant closing and reduction of Amarillo, Texas shifts. So obviously the market's going to see this as exceedingly negative. You know, we've seen this many times before. Obviously, you know, these packers they're losing money killing, you know, so obviously you take a buyer out of the market right away once these things start to get into motion. Obviously this is going to supposed to take place in January, but the market's trading it now, you know. So like that was kind of the shock. So obviously they're trying to gain some margin back, reducing those slaughters for the time being. Typically we see maybe a little bit of redirecting of production after that, but obviously like we just opened here and we're limit down right now.
Limit down.
So that just goes to show that like once you take those buyers out of the market, everybody knows what has to be done, right? So like the bids just go away. So at this point, it's just a matter of where it's going to stop and how much is going to get baked in here. But obviously poor packer margins have really been, you know, a big, you know, there's been a lot in the news about this. And same with the cattle rancher margins. I mean, like, obviously we've made a big decline. We traded to record high prices and we're on the downswing right now. And we were really hoping that maybe we'd get some bullish supply numbers to really kind of change the direction of this thing. But obviously we're going to be in kind of full liquidation mode, you know, today here. And it's going to follow through. It just does. I mean, I think the last time this happened, we pretty much took out a year of an annual range out of the market here before it finally bounced. So we'll see how this continues, but overall it seems like it's going to be kind of another wild ride here this week. So we'll see if maybe the administration comes out with something new, maybe to help prices or stop it. But right now, that would be defying what they've been trying to do this whole time. So we'll see how this goes. I mean, cash market already started lower. I imagine if the board is going to stay like this, we're going to see another sharp drop in cash this week. On the hog side of things, still in the dumps as well, kind of steep losses on Friday, and it just feels like the market's trading this pretty big production here, and it seems to be overwhelming. So, you know, with carcass did kind of bounce a little bit. We saw $11 appreciation in bellies on Friday. So overall carcass was up 322, but I think you baked in a lot of bad news on the hog side of things. It's just a matter of, I think, where cash is going to finally end up as well. So, I mean, seasonally we trend lower from here. So just a lot of bad news coming into this week for the meats.
Very good. Rise it too early. You got any synthetics or anything like that, or we just?
I don't have any, but we'll figure it out. I mean, if they come off a limit, I mean, you know.
I mean, every month just open limit down, didn't it?
Right, we're
all the way out
across across the board here. So I mean,
all right.
Except for December 2026, we're only down 720, and
we're going to be pretty much there. Huh?
We're pretty, we're never mind. We're offered limit down. So.
Okay. Well, if
it's a bad day.
The cattle side, give Rye a call if you need to visit there. Just came into the open, obviously. Here we got December corn down $0.0125, 424 1/4. Jan soybeans are down 8 1/4, 11.16 3/4. In December, Chicago wheat's down 3 3/4 at 523 1/4. Again, we will get an export sales report out tomorrow morning, 7:30 Central. That'll be for the week ending 10/9. So we'll go through that and visit about that in the war room. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. And it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a good start to the week, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com. Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.